Hello trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at dollar franc in recent trade, seeing some really interesting price action coming off of a surprise from the Swiss National Bank and some better than expected data in the US combining for this dollar franc to get all the way up to 90 cents for the first time in several months, pretty much year-to-date highs here, and we'll take a look at that price action in just a second. But yeah, a lot of news coming out on the US and Swiss front in recent months, and it's led to some pretty significant weakness for the Swiss franc. That's been one of the strongest major currencies over the last 2 or 3 years, where we've seen some forex volatility. You might say, oh, this US dollar has been the strongest of the major currencies. The Swiss franc has actually beaten up this dollar pretty good in recent years. We'll take a look at that in just a second, but let's take a look at first the most recent couple of months in this dollar franc. As you can see, moving through year-to-date highs and highs since the end of last year. We'll go deeper on more historical price action in just a second, but a lot of this coming on Swiss weakness from both a data perspective, which we'll take a look at, and also from an interest rate perspective, as the Swiss National Bank came out with a surprise rate cut here recently, and we'll dive into that piece as well. But yeah, some pretty wild price action going from 84 all the way up north of 90, and we'll take a look at where this pair can get to in the future, given some historical extremes. But a hell of a run here in the US dollar to the upside, and some pretty significant bearishness for this Swiss franc to start 2024. What's been going on? Well, from a data perspective, you may have heard about the US strength in a lot of its data. Part of the reason why the Fed has continued to push off some of its rate cuts further and further from here in 2024 is not only GDP growth strong, but also strong employment, strong inflation as well, is kind of the side effect of some of this strength seen here in the U.S., but not so much in Switzerland. As you can see, the last few quarters of GDP growth hanging between 0 and 1% relative to what has been consistently over 2% for the last few quarters in the U.S. And so with this strength in U.S. data, also seeing that coinciding strength in U.S. dollar. And you might say, hey, I mean, isn't the Fed just about to start cutting rates? Wouldn't this be maybe a time for some U.S. dollar weakness? And the Fed did say in their dot plot that they are looking at lowering interest rates in 2024 and beyond. Right now, sitting at about 5.25% to 5.5%. That's the Fed funds overnight interest rate. And you can see here the dot plot for 2024 is focused closer to 4.5%, so about 75 to 100 basis points lower than the current rate. And Fed Chair Powell at the recent March meeting, though he didn't cut rates then, he did say that interest rate cuts are likely to come at some point this year. And then you can see the dot plot that they came out with for 2025 and 26, and in the long run, thinking interest rates will get down closer to 2 to 3%. And so with that, yeah, you might think, well, U.S. rates are moving lower. That means that there'd be maybe less demand for that U.S. dollar, and so all else equal, wouldn't you see U.S. dollar fall? Well, very rarely do we have all else equal, and the Swiss National Bank actually came out with a surprise cut of its own, not even just talking about it, but going for that cut, and a couple of things by comparison here, right? One, the Swiss National Bank did not hike interest rates to nearly the heights that the U.S. did. Now, the Swiss economy had a couple other things at play that were causing some great Swiss franc strength over the course of the last couple of years relative to the U.S. dollar and relative to the euro and pound and a bunch of other currencies. But now they do seem to be seeing some weaker data And obviously the Swiss National Bank sees it with a 25 basis point cut. And so didn't get to those heights of the U.S., not just talking about cutting, but already seeing some of these cuts. And if they're going to, cut even, if they weren't, to cut again, being at 1.5% already is far below where the Fed expects U.S. rates to be even in the long run of past the next 2 to 3 years. And so the U.S. advantage from that perspective would stand even in that long run if the Swiss National Bank doesn't cut any further, even though they've already started the cuts and could definitely continue and have been, as far as zero, even negative, coming off of the pandemic. But let's take a look at the longer-term price action for this pair, because dollar franc is traditionally one of the least volatile major pairs. And you can see over the course of the last 3 or so years here, it's a market that's gone from the lows of around 84 cents all the way up to parity at a dollar even. And you compare that to a euro market that's gone from around 95 cents all the way up to highs for the last couple of years of around, I believe it's 115, 120. This is definitely a smaller range compared to your euro or your pound or even your yen has been pretty volatile in recent years. But we are now entering kind of the middle part of this range, and there's a lot of potential for both directions. If you think this trend continues, the dollar strength, the Swiss franc has already seen its peak. This market, like I said, was at parity in 2022, and so could easily go from 90 cents to parity. On the flip side, if you think that this is a bounce back for the dollar similar to what we saw in the middle part of last year, where the market went from around 85, 86 cents all the way up to the 90 handle and then reversed again at the end of last year, then there's plenty of room to the downside to the tune of 500 to 600 pips there. And so setting up really nice for people looking at either direction as this market has traded, from this standpoint, at least a few hundred pips from where it is currently in the most recent few years here. But for the time being, you can see that's a pretty singular direction out of this dollar franc trade over the course of the first quarter of 2024. We'll see if that continues. Obviously, we'll be watching for the Fed and the Swiss National Bank to see their next moves. But even before that, monitoring both U.S. and Swiss data points consistently to see if the U.S. either falters or maybe they even can outshine Switzerland by a greater degree, or if the Swiss are able to pick up with some of their data, or if their data continues to move lower. So many things will affect this pair that's already in a pretty volatile tone at the moment.